So after a day after yesterday's seismic falls, let's pick over global markets now with Markets.com's chief market analyst Neil Wilson. And from Abu Dhabi, I'm joined by Dr. Ryan Lemand, who is Senior Executive Officer of ADS Investment Solutions. Neil, let me start with you first. I mean, it was a bit half-hearted, the rally in Asia overnight. There's been a bit more conviction in Europe, hasn't there?
It has, yeah. It's been a real sort of turnaround sort of day for the markets. I think, as you alluded to there, the bounce in oil prices has probably helped the UK market here. There's definitely a sense that yesterday's sort of after such a steep fall that you are likely to see a sort of bounce back because of near-term sort of technical levels being sort of suggesting that it was very oversold. And then also, I think you saw yesterday's rout was really all about that collapse in the oil price, which fundamentally shouldn't probably produce such an oversized effect on wider financial markets. I think so. There's a sense that maybe we're seeing a bit more reason coming back into things, but that doesn't mean that I think that this is the bottom. I think there's still an awful lot of volatility out there.
Well, Neil, as we speak, the US has just opened. The Dow, I think, has opened some 3.7% higher. Do you think this is a sustainable rally in the US? I mean, events do seem to be quite US-driven all of a sudden, don't they?
It is, yeah. I think everyone sort of focuses on the US Open and what the US market's doing. I think equally we're focused very much on what Donald Trump might say and what sort of package of support he's going to come out with. He talked yesterday about tax cuts. That seems to have underpinned a bit of strength today. So we're looking at that. We're also looking at what sort of measures the European Union might come out with. They're talking about maybe reducing capital buffers or easing capital buffers for banks. We've seen Italy coming out with more stimulus. So you're seeing the sort of the situation on the ground in terms of the coronavirus is clearly getting worse and will get worse across the rest of Europe. But you are equally seeing governments and central banks and so on coming out with a lot of stimulus. So I think the focus will be on what kind of stimulus we might get, and then also what the headlines are in terms of the spread of cases.
Ryan, let me bring you in. This has been some rally that we've seen in the oil price today, hasn't it?
Yes, absolutely. The drop that we've seen yesterday was quite big. It's an overreaction, and it was expected that the oil prices would rebound. Now, obviously, we're waiting to see what's going to happen. Today, there was a big announcement from Saudi Arabia with regards to how much oil they will be pumping. So clearly, they're going over capacity. They might be tapping into inventories. So the Saudi Arabians are probably going with the shock and awe approach with regards to this price war. So the coming days will give us a little bit more clarity. However, we do expect the OPEC Plus members to get back to the negotiation table and come up with a deal. We do not expect this to go on for months and months going forward.
That's really interesting you say that, Ryan. I mean, the Saudis, as you say, really throwing down the gauntlet to Russia today. How do you think Russia is going to respond?
Well, it's very hard to say. This whole oil episode is quite surprising, completely unexpected. I think the Russians will wait a few days and probably not react to it. I doubt the Russians will play along. Again, I'm sure that in the back channels at the moment, there's a lot of negotiation happening, not only between Saudi Arabia and Russia, but the other OPEC Plus members are probably talking to both Russia and Saudi Arabia to fix this problem, because it's a lose-lose for everyone in the OPEC Plus. And we've seen back a few years ago, when the cartel does not function, when OPEC is not functioning, the whole oil market collapses. So it is in the best interest of everyone that they get back together and the cartel works again.
Ryan, lest we forget, 5 million Saudi citizens bought shares in Saudi Aramco at last year's IPO, and they're now sitting on losses following these recent moves. What's been the sort of reaction in Saudi Arabia to that?
Well, purchasing Aramco stocks is not buying it for equities features. Aramco stock is a fixed income-like stock. And here in the UAE, we have several stocks like that. It's a stock that you would buy and hold for a quite long period of time. You buy it for its coupon-like, for its bond-like features, because it pays a coupon. It's a revenue-generating stock, and it's something we would advise our clients to buy. It's quite interesting to buy it at these levels. These investors who buy such stocks are not very sensitive to mark-to-market. They really buy and hold it. Some of the stocks in the UAE, some investors have been holding them for 15 and 20 years.
All right, Ryan Lamond in Abu Dhabi and Neil Wilson here in London. Good to see you both. Thank you for joining me.